Hi crypto fans, welcome to CCS Cryptocurrency State. My name is Santiago, I'm a web developer and investor, and in today's video I'm going to review Bitcoin and the possibility that we could have a bull trap and get more downside price action. This doesn't mean that the bull run is over, but from the last 2 days Bitcoin has been recovering from the 27 downtrend of last week, and everybody is calling from new heights right now. We are going to do some technical analysis to see if that is the case or not. And I am also going to teach you about the Wyckoff distribution schematic theory applied on our current price action. Before we begin, please like the video, subscribe to the channel and click the bell to get the notifications. Remember that I launched the most amazing giveaway. I will be giving half of a Bitcoin to one winner and one Ethereum to 5 different winners. So the link is in the description. You need to be subscribed to participate. So please subscribe to the channel with the bell on. Without anything else, let's go into it. Hey guys. Well, I am recording this video today, Tuesday, at 8 ADT time zone, so probably you will see this video in 11 hours. I mentioned this because the price action could be very different for them, and the current price action is what I will talk in this video. Bitcoin has been parabolic from October, November 2020, and we have been creating always higher highs and higher and lower highs too. And recently, the last weekend, we create our previous lower high. That means that this high is lower than this one. In order to continue the trend, we needed to create a lower high higher than this one, but that didn't happen. We already closed it with this lower high. And that is very bearish in a pattern that has been working perfectly from the last 7-8 months. That is the first warning sign. The second warning sign is that we have been chopping around here from February already, almost two entire months. Even if we created higher highs on the price, the range that we have creating is what concerns me right now. We are the 2 months chopping around the same levels of price, instead of continuing and creating higher highs and higher range. That happened here. When we broke this triangle here formation, then we didn't come back to test these levels. We already started a new trend here. So right now we have a lower high here, and we have been 2 months already in this price action. And the last 2 days we recovered from this 27 downside that we have on the price. And right now, today, I hear everybody calling for a new high at $70,000. All the YouTubers that the last 3 days have been bearish, of course, right now just turning into bullish. And that is not how I want to manage my channel or my information. I want to keep everyone aware of the reality of the chart. And for that, we are going to study the Wyckoff distribution schema. Well guys, the Wyckoff schematic is basically a chart that enumerates a couple of situations when the price action has been reached a potential top. Before entering into the analysis of the chart itself, I want to mention that it was discovered or created by Richard Wyckoff. It was early in the 20th century. He was a pioneer on technical approach to studying the stock market. And why we call it Wyckoff distribution schematic? What is a distribution? As with accumulation, distribution is a very specific process. Simply put, it is the process of distributing, selling in this case, an asset at the desired best price over a time period. This is the direct opposite of accumulation, where the market participants are looking to secure an asset at the lowest possible cost. Typically, we see periods of distribution after uptrends, which is where we are right now. the composite operator begins the lengthy process of distributing shares. This begins with the stopping action of a buying climax. Some points to consider and characteristics of this chart of this theory is that first, the distribution happens when an equilibrium has been reached in price after an uptrend, where price stalls and begins to form a range. And if we can see here, we came from an uptrend and we start to generate a range on the price action, which is what I mentioned that we are doing right now. Coming from an uptrend and we are generating this range right now on the price action. Also, the distribution occurs with greater accuracy and credibility on charts over 12 hours. However, there are instances where volatility in markets can show signs of distribution on much lower time frames. And we are seeing this in daily candles. So this is 24-hour candles. And the chart is forming like we expect on this Wyckoff distribution schematic. The volume is a key indicator of distribution and accumulation, of course. If you ever show me a Wyckoff chart without volume, you are doing it wrong. And we are working with a lot of volume right now. After an uptrend, we look for signs of distribution or reaccumulation. Distribution has a specific set of criteria that must be matched in order to add credibility to the range. And this range and credibility is managed from this chart. We divide this distribution schematic in phases. We have 5 phases basically. The first one is coming from the uptrend when we hit a new high. The second phase is also a range where we chop around here, but we create a higher high of the previous high. The phase 3 is the ultimate high. We create the third ultimate high here. And then from there we start the slow retracement here and we continue the downtrend. Before we continue with the video, remember that I am doing an amazing giveaway. I will be giving half of a Bitcoin to one winner and 5 Ethereum to 5 different winners. If you want to participate, it's super easy, just a couple of clicks. Follow the link in the description. But remember that you need to be subscribed to the channel with the bell on to be considered. And this is what I see right now in the charts. We came here from an uptrend, we create our first high here. Then we come back and test support. That's also part of here. We create a support line here. Then we chop around a little bit. We create our second high here. I will mark this here. This is our first high on the phase 1. This is the second high of phase 3. And after a while, the phase 2 is the most long phase, like you can see here. We create our third high here, which is the last one on this schematic chart. And from there, we get a very downtrend, epic downtrend here to support levels. And that's exactly what happened here. We get this 27 downtrend resistance, and we had been reaching the $46,000, which was our previous support on this range also. And right now we create this recovery trend on 2 days. It's near to close the daily candle right now. And from here, according to this schematic, we probably will not get a higher high than the first one, like we can see here. So now I think we are in this phase D of this pattern, where we can have a little more uptrend, but never creating a higher high than this one. So in order to this apply, we never should pass $58,000. And right now we are stopping out in a very resistance zone. So according to this schematic, we are going to get down here, probably another peak that will be lower than that, and then we can a continuation for the downtrend, like you can see here. And this will be phase E. So right now I think if we are in phase D. This is only because I see the similarities here in the chart. That doesn't mean that tomorrow when you see this video we broke this resistance line that we have been over all day today. If I go to a 4-hour chart, we have been already like all the day chopping with the resistance line. So in order to invalidate all this concept or all this schematic distribution pattern, we need to create a higher high of $58,000. So we need to break this current resistance and create a higher high here. Higher, at least higher than the first one. From here, if we get support at this level, then we maybe could create a higher high, and all this pattern, it will be invalidated, of course. But right now, you can see here, this is a comparison on trading view from the same schematic that I have been showing. This is from beginning of April. So we have our last all-time high here at 63. And from there, according to this, we are going to experience a more profound downtrend. And right now, I think we are at this stage here, having this recovery uptrend, but this could mean that this is a bull trap here, and we are going to experience more downside price action. So you can see the similarities right now of the chart with our Bitcoin price action. We have the first high here, which is this one, the second one here, and our last all-time high here. So in order to pay attention to this chart, remember we need to create a higher high above, I would say 58,900. That is the higher that we have here in order to invalidate all this pattern. Anyways, I am not saying that the bull run is over. I am not saying that we are not having a new high on Bitcoin, but just want to pay attention that we are not safe yet. The downtrend that we had the last weeks is not over, at least if we don't break this resistance and start creating support above this and higher highs of these two higher highs that we had before. Anyways, I see bullish indicators on the chart. We are completely oversold on the money flow index. We didn't saw this from a long time here on the chart. So this indicates that we need to start a momentum for the upside. On the other side, we have been having higher highs also on the price action, like in the price action. And right now, once we broke that on the downtrend, now we are testing it as resistance. And you can see here, like we already lose momentum. It's starting to get a little curve there. That's not something that you want. We need to break this and create a higher high also in the other side here. But in terms of the stochastic RSI, we are really bullish. We already crossed about 20. This zone looks very safe right now with an epic correction to the upside. We also have been oversold at this point. So looking these indicators, I will say that this is very healthy, and we couldn't go lower than this at that time. We were overextended already, and we are now entering into a momentum to the upside with a possibility with higher highs. Bitcoin dominance very quickly. We are still holding support at 50, and this is a level that I mentioned a lot of time ago. We have a rally on altcoins, and I think Bitcoin needs to recover a little and enter into the 53, 54 to recover some dominance over the market. Because if we lose the 50 level, then we are going to have another altcoin season for sure, like happened before. This level has been support all over here, and again now. And this, which is in green here, is the last altcoin season that we have on the last bull run on 2017. So if we broke the 50 level right now, I think we could see a very big altcoin season. So I think Bitcoin needs to recover a little of the dominance. Well guys, that's it all for today. I just wanted to do this video and educational purposes for understand, and maybe you were not familiar with this Wyckoff distribution schematic, so maybe you learned something new today. This is the state of the price action right now. So we need to continue pay attention and creating a higher high or our first leg up here on the chart in order to invalidate all this situation. So let's wait for the price on that. Before we leave, please like the video, subscribe to the channel and click the bell to get the notifications, and I see you in the next video. Bye.